this. Fidelity says the number of 401k millionaires in the U.S. has reached an all-time high as stocks continue to grow retirement accounts. Joining us now is David Stryzewski, CEO of Sound Planning Group. David, good to see you. Now, I didn't know this was a debate, okay? But there's some debate about whether 401ks are really the best way to prepare for retirement. Help me out. Are they, or is there something else we should be looking at here?
Well, Brian, there's no question that there are advantages to having a 401k. And one of those advantages is that, typically your employer's matching you. And so free money is one of those reasons why 401ks can be a great place to be saving. But people should really be paying attention to Roth IRAs. Now, one of the things that Fidelity's article talks about, though, is the difference between 401k savers and IRA savers. So IRA means you're doing it on your own or through a brokerage firm. And so there are a lot fewer IRA millionaires than there are in the 401k category. But basically, the biggest difference between the two is that, if you're saving consistently over time, you're getting that compound interest that's really important. But to your point, Brian, Roth IRAs and getting some tax diversification right now is literally the most important thing people should be paying attention to.
David, where are you on the dreaded R word, recession? GDP this morning comes in stronger than expected, but Dollar General this morning tells us that the low-income consumer is very constrained. Where are you in this debate?
Well, I think that that GDP has to come down as the consumer goes, so goes GDP, and that consumer is absolutely credit strong right now. It's pretty amazing. We're looking at like a 30% plus day here for buy now, pay later Affirm, and so that tells me that there's a lot more demand going to places like Affirm because people are just capped out. And so if you don't have credit, you don't have the ability to continue to go out there and buy. But I do think that there's a lot of boomers that are more affluent that are out there still spending money on some things. So it's not slowing today, but I think that we are certainly 12 months or less from recession.
Speaking of spending money on some things, David, I want to talk to you about news of the day, and that is NVIDIA. NVIDIA didn't beat by as much as analysts wanted what they were looking for. But I mean, gosh, the earnings report was still huge. I mean, they doubled sales. I'm wondering, now that shares are trading down more than 3.5%, are you buying this dip?
So we've got about 30 different portfolios. So our focused growth portfolio is actually one of our flagships, and so we own NVIDIA right in there. And so we are buying on dips, and I think that we can see more volatility here in the future that will open up good opportunities to buy. Now, let me just be very clear with NVIDIA real quick, and to note that if we look at the price to sales ratio, 39 times right now. The S&P 500, as an example, is only 3. You got places like Google that are 6, Apple's 9, Microsoft's 13. So 39% is pretty high. One of the things I think is important is I can talk out of both sides of my mouth here. So one side I can say, hey, should be a great opportunity for NVIDIA. AI is not slowing down. And the lower rates coming will benefit tech. On the other side of my mouth, I can say, you know what, this thing's rallied so fast so far, and it has such a significant portion of market cap. When we look at how NVIDIA has been operating, 78% margins, that's, in my opinion, pretty greedy, getting a little sloppy, especially because they're not able to deliver the quantity that's demanded right now. What this has done is it's caused players like Microsoft and Apple and Google to look into creating their own chips at a lower rate that are going to be more in line with what the need is today, not these incredibly amazing NVIDIA chips that are maybe a little bit overpowered. For the current use today.
David, real quick, you can't talk out of both sides of your mouth on this show, so you got to put your money where your mouth is. Are you buying the dip, yes or no?
I am not buying the dip. In fact, I shorted it yesterday.
Okay, there you go. We know where he stands. David Stryzewski, good to see you, my friend. Always appreciate speaking with you.
Till next time, Brian. Thank you.
All right.